January is over and the 2025 housing market has already begun a massive shift, and we've seen a lot of movement in rates as well as sentiment in the market. We've also seen a lot of activity. So this video is going to break down what's happened in January and really what to expect the rest of 2025. My name is Eric Hamilton. This is my YouTube channel where I try to provide data-driven insight to help you navigate the housing market. I release videos weekly that outline how to use this data to be an informed buyer, and most importantly, to have a relevant opinion based off of fact so you don't look back and regret any decisions. I don't always say that buying is the right time now. I just want to give you the data so you can make better decisions on when the right time is for you. So let's break down January and talk a little bit about what's happened. So first and foremost, mortgage rates. Mortgage rates are really being driven by a few variables. Number one is inflation. We've had, what they say sticky inflation. So inflation has remained high, and we've had employment. But the one thing that I keep talking about is deficit. So employment is just how strong the job market is. And we've seen the job market, there's a lot of debate out there, there's a lot of opinions about that, but the market can only trade the data that's out there. And the data that's out there, the job market has been relatively strong. We are in a strong job market. Now that could continue to change. And the market has been looking and expecting the job market to weaken. Now, we never want people to lose their job, but a very strong job market can be inflationary because as more people are employed, the more money they spend, and the more likely they are to cause prices for goods and services to increase. The other thing is deficits. So deficits are one of those things where we've seen very little talk about this. If you watch my videos, it's something I talk about all the time. Deficits are really the key as far as I'm concerned, because the bond market is which mortgage rates are based off of, okay? The bond market is, we have to issue treasury bonds to fund deficits. And the more treasury bonds we issue, the harder it is for mortgage rates to move lower because the 10-year yield continues to move higher. We've seen this because the Fed has lowered the Fed funds rate, which is not mortgage rates, and we've seen mortgage rates move higher. And that can be very confusing for the consumer, and there's a lot of reasons why, but the market is looking ahead, and my opinion is a lot of that has to do with deficits. If we see deficits start to move lower and we see our government starting to maybe move deficits lower, I think you can see the bond market start to move lower on the expectations that will get better as time goes on. So that's my hope as we move forward. Obviously, if inflation continues to go down and employment worsens, that is going to bring down rates. But I think until deficits move lower, I think we're going to be limited on what we can do. Now, remember, the expectation right now is that we're only expected to see 1 or 2 rate cuts before the end of the year. Now, I wouldn't pay a lot of attention to that, and I wouldn't focus on that as much because most of those expectations that are out there tend to be wrong every single year. We expected almost 5 rate cuts last year. We didn't get that many. We've seen as many as 1, 2, or 3 expected in 2025. I wouldn't pay a lot of attention to that. I would pay attention to inflation, employment, and deficits. That's it. Those are the 3 things that I feel are the most important thing moving forward to bring rates lower. Now, what's been confusing, what I mentioned earlier, we've had Fed rate cuts and market reaction. The market is, dependent and looking ahead. So the market was trading before the Fed rate cut and rates moved lower because they were in expectation of those rate cuts. Once they happened, now the market's looking ahead. And you have a new administration, you have new policies, you have a lot of news going on. We had massive news this week with Senate confirmations, Iran news. You have all these things going on with Israel, wars, bombings, all these things that happen that are going to affect the market reaction and what happens in the future. So the market is reacting to all of that in real time, and they're looking ahead and trying to guess where the market will be in the future. So that's where we're at with Fed rate cuts, and why the market reaction has been very different since those rate cuts is because now the market's looking ahead. The Fed has been out there trying to be very conservative about future rate cuts, so all of that is affecting where mortgage rates are. Okay, now do I feel rates will be lower a year from now? Absolutely. Okay, but I feel, and I've said this over and over again, That ride is going to be a lot more bumpier than people are expecting. Rates don't go down in a straight line, so it's going to feel very different than it has in the past. We're not going to have this magic moment where all of a sudden rates move lower and it's a time where everyone can enter the market and everything will, be easy. It's not going to happen that way. We're going to have, a lot of news that continues to hit the market, and it's going to be difficult for the market to adjust to that. So that's mortgage rates. Then we have inventory. So I think inventory is one of those things where, depending on where you live right now today, inventory is driving a very different market. So if you're in Florida, we have a lot of inventory. We have, a lot of condos on the market. You have new construction competing, and we have inventory higher today than we did in 2019. Okay. If you're in Illinois, we have 59% fewer listings than we did in 2019. That is going to cause home prices to move higher and continue to move higher in Illinois. Not to mention, if rates start to move lower, remember, for every 1% lower in rates, 5 million buyers could potentially enter the market. So you're going to have to look very differently, depending on where you're purchasing, on what inventory is in your state, in your area, in where city you're buying, versus where it is, in the national when you hear the news, because there's a lot of different markets. It's very segmented. We always say real estate is local. In this market, it's very important. Why is that important? Is, offer strategies, okay? And winning multiple offers. Yes, we are still seeing multiple offers in Illinois. I had an offer over the weekend where we had more than 20 offers, okay? I had an offer in Florida where there were no other offers. Two totally different scenarios. One where we have no other offers, we're asking for closing cost credits. The one where, we're in multiple offers, we are negotiating to win, and that takes a lot of work up front. So the best way to be prepared in the current market, okay, is going to be all the work that you do up front. You want to be very mindful that the best outcomes that I have are for people that do a majority of the work up front. And what does that mean? That means getting all your paperwork in, going through monthly payments, going through cash to close, talking through strategy, talking through with my team and myself on what's going on in the market, where inventory is, when we expect inventory to be listed, how much money we're going to need to put down, how much money am I going to need at closing. If you have all that information up front, you are more likely to be able to make a better decision financially because you have the data up front. There's nothing worse than finding your dream home and then getting all the information for the first time and being overwhelmed. And that happens every day. About 30% of my business comes to me because people are approved elsewhere, and then I get the information. So right now, okay, the best strategy is to do the work up front. The best outcomes come from those who do the work up front. And the main reason why is because the more data I can give you, the more likely you are to see anything that's going to cause any surprises along the way. And for the buyers that we do that for, which is a good portion of my pipeline, we have a very high likelihood of getting offers accepted because we're providing a very high level of certainty to the listing agents because we've already reviewed income. We've already gone through assets. We've already gone through monthly payment. We know what the taxes are. We know what the payment are. Our pre-approval letter is updated specifically for that offer. All these things make a difference in multiple offers. And the more time that we have to do that, the more success we're going to have and the better experience that you're going to have. The other big thing from a market update in January is just there's only 14% of buyers nationally that are taking advantage of down payment assistance and grants that are available. So it's really important that you make sure as a buyer, especially if you're putting things off, average first-time home buyer age is 38. So most people are missing out on opportunity, and that's because they're missing out on grants. So make sure that you are taking advantage of. We have some that have 3% down payments with an $8,000 grant and a $500 appraisal credit. We have others that have through Illinois Housing that have, you can pay student loans off. There's all these grants available, and I continually put the link in my videos of, the way to shop and make sure that you're getting those and make sure the lender that you're working with is offering those. It's the single biggest thing that we can do to help first-time homebuyers get over the trouble with high prices and higher interest rates. These grants can be used to help buy down the rate, lower upfront cost, and it's really, really important. The other big update that I wanted to mention is just it's tax time. So a lot of buyers are getting tax returns that they're using, for down payment. Again, the more work we do up front, the better we can prepare you, and the more we can line up those numbers to get you aware and what we need to do. So again, the last thing that I want to mention again is the best outcomes come to those who prepare. So there is no cost to do an application with myself and my team. We do not do a full credit report. We do a soft credit pull. And what that allows us to do is do a lot of the work up front, save you a lot of time and energy, and provide a lot of information for you so you can make an informed decision. You know what your interest rate is, you know what your cash to close is. And when you go out and you compare us with other lenders, you're going to know exactly what we can offer you in order to compare with those other lenders. And by us giving you that, it gives you something to provide them to make sure that you're getting a good deal from us. And we love those opportunities because we feel that we are extremely competitive, and we like when someone goes out and realizes all the work that we do and all the value that we provide. In addition, we're competitive on rates, and that's the most important. So, the rest of the year, we're gonna see a lot of volatility. We're gonna see a lot of changes. These updates will continue to be just as volatile as the market that we're experiencing, and we're going to continue to see a lot of movement in rates. But the most important thing as a buyer is to be prepared. You don't want to be reacting to news in this market too late. You don't want to be waiting for rates to go down. The average home buyer over the last 5 years, if you would have bought a $300,000 home, you could have made 54% over the last 5 years on buying a home. Okay. And with the average age of 38, my concern in this industry is too many people are waiting and they're losing out on that appreciation. I still feel home prices are going to continue to move higher, but the later people get in, the less they have over time. So the sooner you can get in, the more you're able to, have that appreciation and value over time. So again, my team and I are available 7 days a week from 7 in the morning to 11 o'clock at night. February will be, we've seen a lot of activity. This is probably one of the busiest months we've had. And you figure we're in the Midwest, we had 10-degree below weather, and we're seeing multiple offers. Just imagine what it's going to be like after Super Bowl when spring market comes and we have 59% fewer inventory in the market. The likelihood of getting an offer accepted without having other offers is going to be very slim in the state of Illinois. So the sooner you get started, the better. Any questions, reach out to my team. We're here to help, and we'll be back to give you an update in February.